Hello everyone, welcome to this episode of Market Pulse. I am Ajit Mahuli, the founder and mentor at LPAT. Let's take a look at what the indices have been doing and are likely to do in the coming week. Let's begin our analysis with Nifty. On the monthly trend is up. But again, this is after 2 months of more of consolidation price action, though it has printed new highs. Uh, the strength is missing here on a monthly chart. So if you see, this is the third month and we are about 10 days into this month. It's still not able to have a clear move to the upside. We'll have to wait and watch how it pans out. On the monthly chart, that's still going to be the area where we will look at long positions if at all we come on the higher time frame. No supply zone on the monthly. A quick look at the weekly after a series of compressive price action moving up, though it has been giving new highs. It is prone to a sudden fall because there is no great demand zone on the weekly chart that you can see. The demand zone that we are able to figure out, we are able to see on based on the charts on the weekly chart is still this no supply zone. So if this continues to fall, you could see the markets coming down first towards 21,900. That's the main uh, price area which has been holding the Nifty index for the last nearly 4 weeks. And if that breaks, we could easily probably move towards 21,500 and subsequently lower. These are the new demand areas, but very far away. Markets could remain volatile and range bound. So more price action clues on the smaller time frames. On the daily, if you see, this is a very compressive kind of price action. Though it has given new high, we always see one big candle and then fall. That's what we have been seeing here. On the daily chart, that's the area where there'll be some probably orders which will probably push the prices up. Today we had a pretty good fall. We don't have any supply zone still on the daily, but that can act as a picture of supply and push the prices down towards at least, let's say, 22,400. So the key area will be probably to get to see how price behaves at 22,200 areas. If it doesn't stop there, we can easily see price moving down to 21,900 odd levels. On the smaller time frames, if you see, that's a area of demand zone where we are probably just we close to that area. The next area of demand zone is here. So if you break this, probably the trend will shift down on the 75-minute chart, and you could see prices coming towards 22,000. So cautious approach, even though prices move up here, you could see they might halt here or turn down here. So cautious approach towards the buy side and wait for confirmation to go on the short side in the index. A quick look at India VIX. India VIX, after a fall today, tried to move up. So if India VIX keeps moving up, we could see markets probably retracing further. Remember, we have inflation numbers coming out tomorrow, and that could probably drive the markets further. So cautious approach towards index trading. It could still remain range bound. VIX is making a pullback. If it goes above 15.5 again, we could see it making an attempt to touch 17 or 18. A quick look at Bank Nifty. So Bank Nifty, the monthly just by price retrace today. We still have to wait for a breach of this for the possible change in trend, which could drive prices towards 42,000, but that's only if we are able to break 44,600 on the monthly chart. So that's a monthly area of demand. The trend is still intact to the upside. On the weekly chart, this is the price area, price move, which went to this picture of supply here. That's a weekly supply. Now, if it comes here, we could see price probably making coming towards, let's say, 46,500 levels. The demand zone still stands here. There are no demand zones which have some achievement on the weekly chart. So that's the weekly demand zone. So that's going to be the range. We are at the upper end of the range. So be cautious and wait for some confirmation to short, or if we come somewhere close to 46,500, look for confirmation longs for short-term income trades. On the daily chart, that's Bank Nifty is at a very crucial level. This is the supply area which is currently in control. That's a daily supply. So now this is going to be a very crucial area on the daily chart. This RBR kind of price move. If we hold this, we could make an attempt to move towards again 47,800. If you breach this, price has an easy move towards this phase on the daily chart. That's 46,300, where we can look at some confirmation longs on the Bank Nifty chart. But still, sorry. Still, oh, so that's still the area on the daily chart, which is the demand zone. So that's going to be your range for Bank Nifty for the next few days. 48,100 approximately to 46,500. If we break this, if we don't break this, it could be a narrow range here. At least tomorrow, I think it should be remain in this range till the inflation numbers are out, and we'll wait and watch how the US markets react today, though the effect is going to be only tomorrow end of day our time on the US markets. 75-minute chart. That's the area of demand zone, which where Bank Nifty is in. If we gap down below this, good chance we could move down, but we'll have to wait to see whether the gap down is bought into or we close below this area. If we start moving up again, that's the area where you can look at some aggressive shorts for short-term income. Remember, it's going to be still aggressive because the Bank Nifty trend on higher time frame is still to the upside. But if we break this, pretty easy move towards these areas and probably these areas. So that's going to be your range once we break this 46,300 or even 45,801. That's maybe a little second target, second level for Bank Nifty, but demands of a Bank Nifty. But right now, as long as this is holding our shorts, shorts should be only at these areas. The index could remain range bound for the next uh, few days, but the range could expand from, let's say, 48,000 to 46,000. All right, so cautious trading, wait for the news to come out and then take positions. I hope that helps.